because, folks, history shows time and time again when outbreaks happen throughout the globe that the market's reaction is very short term, and it's always overdone and recovers very quickly. In fact, if we look historically, on average, the time, whatever the outbreak is, whether it was the 9/11 attacks here on our home turf, or the latest crisis that's happening in the Middle East, or the terrible terrorist attack against Israel on October 7th of 2023, the markets typically bottom within 6 days and then recover fully within 17 days. I mean, these are the averages. So if you decide to punt and sell and follow your emotions, you're usually making the worst timing decision that you can. Now, let's put a little more meat on this, right? I always tell you we bring one headline, one chart. Well, this week's money chart shows you the performance, the average, and then the median for over 50 years of geopolitical events and their impact on the markets, right? So if we look at this here, the S&P 500 after a geopolitical event, again, there's after 40 different geopolitical events. This one's coming to us from Carson Investment Research. We just prettied it up and changed the appearance a little bit to drive home the point. But look at the S&P 500 average. If you're looking and squinting a little bit to kind of see the difference, you'll see that there's not really a huge difference. So if we just compare the normal S&P 500 performance versus after geopolitical events, really the biggest impact is in the short term. You have a 1.1% average dip, or 0.6% median average dip, and then within the various time periods, 3 months, 6 months, 12 months, we're regaining and recovering, and the markets are back to their rallying way.